Okay, because you'll hear us say that quite often. Something's not quite ready yet, or I'm going to wait for a secondary entry or next entry. If we say that, those are actually two different things. So we'll take a look at today's play, show you kind of how that works. Okay? All right, let's go ahead and get started. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for February 16th, 2021. Q's down 0.27, SPY basically flat. Okay, we came into today bullish on the market, uptrend on every time frame. Let me go ahead and get rid of the after our hours here. We don't really need it. And so going into tomorrow, still going to be bullish. Okay, and as I told the room, as we are closing at the end of the day today, we're really at least two setups away from being bearish. We would need to end this uptrend here on the daily first, so we need to get either underneath this pivot here, underneath this pivot on the Qs and SPY. They did it at the same time, the same day. We'd have to get underneath there and then do another setup, or we need to tomorrow try to move up and then fail underneath today's low. And then if there's follow through to that, then the next sell setup or the next base breakdown, right, is our opportunity to look for something short. So, or look for a short in the market. So, we're not really there yet. And so going into tomorrow, it's bullish. We don't really have any kind of line in the sand really to work with. Just have to wait and see. Like, unless we get some, decent sized gap down underneath, I think it was 329. Yeah, underneath 329.50, we can look for the next setup. That's like as early as we can start to anticipate. Yeah, a bearish market. Okay, so for now, just such a grind, bullish. All right, on the Qs and SPY. All right, let's get into today's play here on the DNN. This is actually Sammy's play, but we're going to use it for the purpose of looking at secondary entry versus next entry. Okay, so in this case here, he was playing basically a break of the opening range. Okay, on a pretty nice gap up here on the DNN, gapping up, clearing most of a red bar, and then right at the open clears it. Okay, so clearing resistance. We've got shock value as well in this gap. Okay, so it's a gap that's okay to be aggressive on. Okay, so it plays the breakout. Okay, now in this breakout here, okay, I missed it. Okay, so I missed it, and while missing it, would be okay to say let's look for a secondary entry, which is once we get a reaction. Okay, once we get, if you're playing long, some kind of red bar or topping tail, some showing that the seller stepped up. Okay, so you get a little bit of a topping tail. But notice by the time that this gives us the secondary entry, that it's already going to be a lot bigger of a stop, right? It's already up here, and then the stop still goes down there. Okay, so on this one, I played the next entry, okay, which we got a pullback right in there. So here's the pullback, the retracement play. So that's the next entry, basically. You let it go, and then if it sets up another pullback or breakout, then you play the next one, okay? All right, let's take a look at another example here. This was called by somebody, a room member who puts out a lot of good plays. So here's another example to look at, okay? If we were looking at this PXX to play, okay, and you were looking at the first base here, okay, and then you were looking to play as it takes this out. So I think this topping tail might have taken it out by a little bit. It triggered, you had a topping tail. You can play it as a secondary entry right here because it already triggered, you got the reaction. If you want to play the next entry because you're like, okay, it's a little bit too deep, we do have a nice double bottom, but I want to make sure it's going to transition into an uptrend, then your next entry is this base right here, okay, because it sets up a whole new base, a new entry entirely, okay? So when we say we're waiting for a secondary entry, we're going to let it trigger and then wait for the reaction, okay? So let's say you were going to play a secondary entry on this base. You let it trigger, you get the reaction. Now over the reaction, you're in and stop goes still at the bottom of the base. If you wanted to play next entry on this, then you have to wait until it sets up another base, and that's the only one that it sets up, and then off it goes. Okay. So while they kind of sound similar, in concept, they're not that different, because really what you're saying is the entry that I'm looking at is not quite perfect. Okay, there's some kind of flaw, and I want to see just a little bit more proof. Okay, a little bit more evidence that it's not going to immediately fail, or that it's going to prove that it's now transitioned to an uptrend, right? Because you look at this pullback in here, and that's a pretty deep pullback, right? We're on the wrong side of the 20 MA now. Percentage wise, typically on pullbacks, we're looking for 40 to 60, as close to 50. You can see this is probably something more like 80%, right? So a little bit too deep on the pullback. So on something like this, a either secondary or next entry would be warranted, right? Again, really nice call there from the room member there, okay, on the PXS. So hopefully that makes sense. So that way, you know, when we're talking about anticipating either the secondary entry or the next entry, you know what we're looking for. Okay. All right. And then so it can be also pretty useful, especially you know, in the case of like the DNN, which, you know, it would have been fine, I think, if I had kind of chased it a little bit after realizing, you know, I'd missed the play. But you can see kind of the difference. If I had tried to chase it here and, you know, had to use kind of all of this as a stop once I realized I'd missed it, you know, that is going to be a lot bigger of a stop, right? Versus, you know, using the buy setup here, right? Gives me a chance to get nicer share size and get to a target a little bit more quickly. Okay. All right. All right. That's going to do it for today's market wrap. Hope you did well today. We'll be back at it tomorrow, and I will talk to you then. Have a good evening.